Welcome to ETF Wrap, your weekly digest of the top stories in European ETFs. This week, data from ETF Book revealed 2023 has been a record-breaking year for fixed income ETFs. Elsewhere, unintended consequences of Brexit have blocked key issuers from entering the UK market. And finally, 3 ETFs have returned over 100% this year. Who are they, and how have they done it? First up, new data shows fixed income ETFs have already broken their annual flows record in Europe. Bond ETFs amassed $65 billion of new assets by mid-December, beating the previous annual record of $62 billion set in 2019. This came as investors chose ETFs to implement the bonds are back trade after the asset class suffered one of its worst years in 2022. While some broad bond indices fell by up to 30% last year, November saw the Bloomberg Global Aggregate Index book gains of 5%, marking its second best month in 30 years. This shift has seen bond ETFs claim 45% of all new assets in 2023, punching well above their 23% market share in European ETFs. Many pundits are now calling for a slowdown in the US economy in the first half of next year, and cracks are already beginning to show in credit card delinquencies and high-yield defaults. This raises the question of when the Federal Reserve will begin cutting rates, with many analyst outlooks predicting a pivot between Q2 and Q3 next year. Responding to this backdrop, a recent ETF Stream survey revealed 83% of investors think 2024 will be the year of fixed income. Next, issuers launching products from new Irish platforms have yet to enter the UK market as an unintended consequence of Brexit. Amundi and AXA both launched ICAVs last year, and neither have registered in the UK. AXA said the market is cost-intensive and requires adaptations to its range. As such, it has decided to prioritise other markets in the time being. Elsewhere, BNP Paribas Asset Management also launched its ICAV last year and is currently undergoing the lengthy process of registering in the UK. The FCA's overseas fund regime is set to be introduced from April next year to remove hurdles to new platforms passporting to the UK. However, its arrival hinges on the UK government granting equivalence to UCITS vehicles in Europe. Finally, this week we examined the 3 ETFs that have gained over 100% this year, all of which target the blockchain theme. Leading the way with 182% returns was VanEck's blockchain ETF, followed by rival strategies from GlobalX and BlackRock. Crucially, VanEck and GlobalX's products have highly concentrated baskets, capturing little over 20 crypto mining equities apiece. Elsewhere, products such as Invesco's blockchain ETF gained a comparatively modest 33%. However, the product captures 44 companies, many of which operate in other sectors with only tangential exposure to blockchain. And that's a wrap for 2023. Thanks for joining us, and do tune in when we return in January. Until then, a merry holiday period from all of us here at ETF Stream. Take care.